LA is the second largest hotel market in the country and a top 5 performer year to date through 2011. Should finish the year with double-digit RevPAR gains. The strength of entertainment corporate business, the strong rebound of both international and domestic travel to LA, in addition to the benefits of LA Live and the convention center, in the way of tens of thousands of new convention rooms, have been responsible for that growth rate. We anticipate, now that occupancy is stabilizing back into the 70+% range, that there's going to be a real opportunity for owners going into next year to grow rates accordingly. Given the strength of the 2011 performance for the market, I believe conservatively 6 to 8% RevPAR growth going into 2012 is appropriate. And quite frankly, my opinion is almost more bullish than that rate. It could be double digit again based on a strong convention calendar, based on major investments into infrastructure in and around LA, including the expansion of the Los Angeles airport, things like the Cirque du Soleil, $100 million investment in Hollywood. Those types of things will induce more demand, creating momentum going into 2012. By far the most active investors in LA for hotels have been the REITs and the offshore buyers. Sheraton Universal, the Mondrian in West Hollywood, and the Viceroy Santa Monica are all examples of those deals. We anticipate, given some recent share price volatility among the REITs and some international financial market turbulence, that private equity of a domestic U.S. origin are likely the most active investors going into 2012. That's assuming the continued stability and growth in the underlying supply and demand fundamentals in the market, as well as the availability of debt going into 2012. The bigger question is, who are the sellers? And in our opinion, the sellers in 2012 are those that must refinance, can't get the level of proceeds that they would like, and will have no other option but to exit the investment with a sale. I believe, from my perspective, what I'm hearing day to day is investors are most concerned with the economic stability and political stability going into 2012, avoiding a double-dip recession, the European debt crisis spreading, alleviating the political quagmire that's happening in Washington. Hotels are inherently operating businesses, unlike other forms of commercial real estate that derive on stable credit tenant leases. Hotels derive their cash flow nightly. To the extent there's an economic downturn, hotels are more vulnerable. Therefore, again, the political and economic situation in aggregate is of most concern to our pool of buyers.